All right, this one's gonna be fun.
Yeah, it's gonna be real fun. We thought it would be kind of cool to show you guys the power, like a fun little thought experiment. The power of DCA. Now, what does this stand for? Dollar cost average. Now, obviously, I gotta explain to you what this is. If you don't know, we've talked about it a lot on the channel, so most of you guys probably understand this. But what we're gonna be looking at, if you have been dollar cost averaging in a Bitcoin for the last 9 years, since 2013, we're gonna tell you why that date's important. How much money would you have? How much money would you have? Now, it's important to also know, when it comes to this, the percentages are always gonna be the same. Bitcoin's returned the same percentage since 2013, but what you can vary is the amount of investment, and that obviously affects the overall bottom line amount that you make. So dollar cost averaging is when you take a specific amount of money and you put it into a specific coin on a time schedule. So right now, I'm dollar cost averaging into Ethereum. With a small portfolio, $100 a day into Ethereum. We're gonna see how that does over this bull run. I'm gonna keep doing it all throughout the bull run until I think we hit the top. When is the top of this bull run gonna be? It's gonna be a long time. Probably somewhere around Halloween, September, but sometime between August and December of 2025. So you got plenty of time to do this. So what we're gonna do is we're gonna be looking at dollar cost averaging through the history of Bitcoin. Now, when was the Bitcoin white paper published? Take a guess.
I'm gonna go 12 years.
Wrong. The Bitcoin white paper was published on Halloween 2008 is when it was published. The first Bitcoin was mined 2009. That's when the first Bitcoin was mined by Satoshi, of course. Now, here's what's interesting. I've done a lot of research on this and tried to determine what the original price of Bitcoin was. And it's really hard to determine, but what a lot of people believe is you could actually get 4 Bitcoin for a penny. One Honest Abe will have gotten you 4 biddies. Honest Abe. You guys like Honest Abe? You think Abraham Lincoln ever told a lie? George Washington didn't. That's what they say.
And that's facts.
That's the first price of Bitcoin. Now, that's really hard to estimate because Bitcoin was not actually traded at that point. We didn't actually start tracking Bitcoin trading until 2011, which I believe 2011 or 2010. Can't remember exactly which one. That was when you had the first transaction for a good, where you had somebody that paid old Laszlo 10,000 Bitcoin for 2 pizzas. There were 2 pepperoni pizzas from Papa John's. Not a big fan of Papa John's, but big fan of pepperoni. 2011 was actually the time that we started tracking the price of Bitcoin on exchanges. So in 2011, Bitstamp actually had the price of Bitcoin tracked September 2011, so September 2011, about a year and 3 months before I bought my first Bitcoin. And the first price they had it was $11.66. Now, I bought my first Bitcoin around $12 in 2012. So this was a little bit over a year. It showed kind of the sideways action that we're gonna see probably next year, in between kind of a bull market and a bear market. So the point is that we saw this track. So what we're gonna do is we're gonna look at what dollar cost averaging would have looked like. We're gonna say 2013, because 2013 is when a lot of people really started understanding what Bitcoin was. People started trading it. Coinbase was going. I believe in 2013, Coinbase had just started. We just had the Mt. Gox crash. Coinbase may not start until 2014, so don't quote me on that. But Mt. Gox actually crashed February of 2014. So this was actually right when things were really popular in Mt. Gox, BitInstant, and things like that. So a lot of people were starting to trade Bitcoin. So remember this, guys, as we look at these numbers, a 100% return, 100% ROI always equals a 100% ROI. People get confused on this when it comes to the prices of coins. They'll say, oh, well, I'm gonna buy 1 million Dogecoin instead of 1 Bitcoin. I don't know what those numbers work out to, but I'm gonna buy 1 million Dogecoin instead of 1 Bitcoin because, if the price goes up, man, the price of Dogecoin can go so high. No, guys, a 100% gain is always equal to a 100% gain. Doesn't matter what the cost of the coin is. So let's check out over the last 9 years, what would have happened if you dollar cost averaged into Bitcoin. You would have got a return of 1,875%. That's what the ROI would have been since then. It's a total of 468 weeks of investment if you were to dollar cost average since 2013. So what we're gonna do right now, let's look at if you would put $10 per week into Bitcoin since 2013, what would you be looking at? Well, that would have been $40 a month you were putting in, approximately. Obviously, some months have 5 weeks, okay? 9 years, how much do you think you would have? You put $10 in per week. Right now, you would have 4.8 Bitcoin. 4.8 Bitcoin, just putting $10 in a week since 2013. Today, what does that equal? Today, that equals $91,075 today. However, at the peak last year, you'd have actually had $333,126. Boom, $10 a week, that's it. And you might be saying like, oh, well, yeah, but the best gains in Bitcoin are gone. Well, yeah, you're probably right. The best gains in Bitcoin are probably gone, but you don't have to just dollar cost average into Bitcoin. You could be dollar cost averaging into XRP, dollar cost averaging into Ethereum like I do, Cardano, maybe some more speculative coins, maybe some layer 2 coins, things like that. What if you had done $100 per month since 2013? What would that look like? Well, this is pretty crazy as well. Right now, and by the way, of course, that's $25 a week, just $25 a week, that's it. You would have 11.5 Bitcoin. And right now, today, that's worth $218,224. At the peak, 9 years, could have made you a millionaire. So it's important to take those profit, guys. You can keep dollar cost averaging, but you can also take profits. That's actually a pretty good strategy. All right, now let's say, we just looked at $100 a month. Now let's say you did $100 per week, $400 per month. So $400 a month, how much would you have right now? What do you think the number is, Aaron, if you did $100 a week over the last 9 years? How many Bitcoin?
I'm gonna go with like 22 Bitcoin.
65 Bitcoin.
Wasn't even close.
65 Bitcoin. Now, right now, that is worth 1.23 million. At the peak, $4.5 million is what you would have had at the peak. That's what you would have had at the peak. That's retirement money, if you're unaware. Very close to it, if not retirement money, right there. If you were to basically, like, let's say instead of Bitcoin, okay, let's say you had decided like, hey, I'm gonna average into the S&P 500. Now remember, that's about almost a 2,000% gain. How much do you think you would get if you had invested into the S&P 500 during that same time? The S&P 500, which is an index of the top stocks out there, what would you get? Let's say you overall invested $10,000. Let's say you invested $10,000. You would have $13,500.
Yikes.
Yeah, yikes. Let's think about this, guys. Warren Buffett, famous for telling you to dollar cost average. Which one would you have rather dollar cost average it into? S&P 500 or Bitcoin? I think the answer is pretty obvious. So why don't you make sure to dollar cost average your way into liking this video. Don't forget to subscribe to the channel. It's all got. Be blessed. Way out.